Hello everyone, morning update from the 25th of January. You may notice another change of scene today. There was a room clash in the office and I've been relegated to the box room, so apologies for the decor behind me once more. So look, the headlines that we're looking at is, Mnuchin, his comments from Davos pushes the dollar lower. The ECB meet today to provide clues on their monetary policy, and the sterling rally does continue. So yesterday from the World Economic Forum in Davos, Steve Mnuchin, who's the US Treasury Secretary, he was quoted as saying, obviously a weaker dollar is good for us as it relates to trade and opportunities. Now this obviously increases concerns over US trade protectionism following yesterday when Trump added severe tariffs to both washing machines and solar panels. Between the two, it's actually driven the dollar index to fresh multi-year lows. Exact figures of this will be in the comments below. To provide a bit of background on this, stretching back to the 90s, the US has traditionally had a strong dollar policy. It's been a symbol of America's strength and economic power. However, when you cut through to today, there's obviously increased competition for trade, and ultimately a strong dollar is seen to be more of a burden for growth than a curb on inflation. I think the current US government is just looking to redress that balance. But these comments from Davos also shed a little bit more light on the ongoing sterling rally. The enthusiasm surrounding the potential favourable Brexit deal may have a limited effect now. Ultimately that's done, that's dusted, and it's been priced into sterling. But it's likely to run out of steam. So what more? Where's the renewed or the continuing strength coming from? Now, likely, certainly against the dollar, this is going to be driven more by dollar weakness now than any higher further demand for sterling. So the question is, how long will that run? Who knows? We'll wait and see. However, yesterday sterling hit another fresh post-referendum high of 142.42, I think. Again, we'll pop that in the comments below. And indeed, that has been further extended overnight in the Asian session. Against a single currency, sterling euro crossed 115, matching the previous high seen on December the 8th, I believe. Details below on that. Looking ahead at today, obviously the ECB meeting is the main event, and it could well be one of the most important meetings we've seen out of Europe in years. Ultimately, the pace of growth in the Eurozone economy is now undeniably above trend. And assuming the rise in the euro continues, that could lead to the trading bloc seeing their exports suffer. Yesterday the euro dollar hit 124.16 and the rally continued overnight in the Asian session, and I believe it hit 124.60, but again we'll clarify that in the comments below. So when they meet today, Draghi could very easily pour cold water on current market opinion, but it does seem rather irrational for the asset purchase scheme to continue much longer given the current level of economic growth. As always, of course, Draghi faces a pretty tricky job in balancing all the elements at play. On one hand, we've got the calls for monetary policy normalisation, and on the other, we've got caution and concern over the future strength of the currency, and this could, the strength of the economy, which could struggle with a stronger currency. But as always, he's the big man. That's why he's paid the big bucks, and I'm sure he'll have everything under control. Tune in for this. The rate decision is announced at 12:45 today, and then the accompanying press conference, where a little bit more detail will be shared, no doubt, will start at 1:30. Thanks very much. Any questions, any queries, feel free to tweet at FXPlu, and I'll see what I can do to put you right. All the best. Have a good day. Bye.